Lyft is losing, half as much money as it's making, Olivia. What are the significant takeaways from the S1?
Absolutely. I mean, people were certainly very excited about the revenue growth. They nearly doubled their revenue to $2.2 billion, but also with that came very significant losses. We're looking at $911 million, which is a growth of 77% over the year before. So I think investors seemed very excited about Lyft, but also, a lot of questions about the losses. But, this is nothing new. Most technology companies nowadays, when they go public, are losing money.
Right. They're making more money, but they're also losing more
Exactly.
money. Tim, what do you think when you, and now we know a little bit more about how Lyft's business compares to Uber, and Uber's revenues in 2018 were $11.4 billion.
I think that Uber isn't growing, and I think that Lyft is. Year-over-year growth of 2x on revenues and bookings at $8.1 billion. $911 million loss is acceptable. They're on path to complete the vision that they're after. I don't think that the S1 was really that surprising. We knew what we were expecting. A lot of the numbers that came out. I'd say maybe the biggest surprise for us was how much of an impact Lyft is having in communities. 34% of Lyft drivers are spending more money in their communities. 47% are spending or exploring their communities more. So that's a massive impact that I don't think we expected. And back to the numbers, the 45.5% contribution is something that is amazing and astounding.
I want to push back a little bit on your comparison there to Uber, because yes, if you look at the full year, Lyft growing 100%, Uber flat. But if you look at the fourth quarter of last year, which is the most recent quarter, Lyft grew 58% in terms of bookings, Uber grew 30%. So but Uber is still growing as of the fourth quarter.
Uber's only growth driver right now is Uber Eats, which I would argue is not in line with social responsibility value that Lyft is after. Keeping people at home and delivering food is not necessarily going to have a positive impact on the communities, on relationships, on things that actually grow our society.
Olivia, is that a fair assessment?
I thought we just cared about money here, but okay. Yeah, I was actually surprised. When we were expecting the S1 to have something about food, we thought maybe Lyft would mention that in the S1, that they would be exploring a potential Uber Eats competitor, but they didn't mention that at all. They really stayed focused on transportation. I think that's the key sort of theme here that we're seeing, is that Lyft is really selling itself as a focused transportation provider, and Uber is going to come out and it's going to be all things to all people.
Now, Tim, when you look at the risk factors, though, Lyft doesn't mince any words. Risk factors: sustained losses, expenses will continue to rise, it might not be able to achieve or maintain profitability.
I think that's boilerplate. Every S1 I've ever read has the exact same set of risk factors.
So talk to us a little bit more, Olivia, about the risk factors and how investors responded when they saw the filing today.
So, I spoke with several investors today. A number of them, the risk factors in the S1 make it very clear that Uber is a huge risk factor for them. And people mentioned that, but it does seem like there is room for both, and that Lyft's market share is gaining in the U.S. They have now 39% of the U.S. market. They used to have 22% in 2016. Other risk factors are the founders, actually, which is really interesting. They have now outsized voting rights, 20 votes per share. So, that's putting a lot of trust and faith in these two founders. If something changes, maybe perhaps if, God forbid, something happens to one of them, that also changes the company significantly.
Right, and we don't know what those 20 votes will actually mean in terms of control, but it's certainly a significant point. And again, not unlike other tech companies where founders have outsized control. What about international growth, Tim? Lyft is still very focused on the United States. They're experimenting a little bit in Canada. Uber is a much more global business. They have certainly experienced their share of challenges. Uber's now buying Careem and their Middle East competitor. Does it concern you that Lyft's vision at this point is not as big?
Not at all. I think Lyft, throughout its S1, says the phrase laser focus, and its laser focus has allowed it to execute in ways that Uber hasn't. And historically, if you look at any company that has chosen the spray and pray methodology and spread itself thin across a lot of different business units and areas geographically, they've had a really hard time being successful. Lyft isn't going to face those challenges. In fact, Uber has 10% of their assets overseas in inefficient or illiquid investments that they don't even know what's happening with, and those could be written down to zero. So investors that are looking for a return on Uber versus Lyft, I see upside in Lyft. Uber, I'm just not sure. We'll have to wait for the numbers.
Olivia, where does the process go from here? When do you see them hitting the public markets?
So we're expecting to see that in mid to late March. We'll be keeping an eye. They're going to go on their roadshow, and then.
So it could be in a couple weeks?
Yes, yeah, that's the plan.